All right, guys and gals, back to work tonight, Wednesday evening, September the 9th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, my job tonight is to help us find the best entry setups for tomorrow. That's Thursday's trading session, and I got a jam-packed, pretty darn good video in store for you guys and gals tonight. Charts are already in the background, as you can see. Got the S&P, of course, got the gold, and of course, with the black gold, the crude oil futures on our radar for tomorrow. Speaking of tomorrow, a lot of great setups we're tracking for tomorrow, Thursday's trading session. Before we jump into it though tonight, before we get this video cranking, I just want to make sure to remind you guys, make sure you subscribe to this YouTube channel, hit that subscribe button, that way you don't miss all the good stuff we publish every evening on this video. And as always, don't forget, if you have any questions, drop those questions in the comment section below. And if you love the video tonight, if you're like me, and if you rely on this video to get your mind right and get those charts right for tomorrow, how about a thumbs up for me if you guys enjoy the content here every evening on this video. So thank you so much for subscribing, and don't be afraid to tell a friend about this YouTube channel as well. Drop a comment in the comment section below if you guys have any questions, and thumbs up. I always appreciate you guys supporting our YouTube channel. Let's get this video going. I'm a little bit early tonight. Let's kick off today's session by looking at the calendar for tomorrow. Tomorrow, of course, is Thursday. It's Thursday, right? September the 10th. Let's take a look at the schedule for tomorrow. Now, of course, as I mentioned in last night's newsletter, some of the big picture stuff we're dealing with here this week is we know we're dealing with that transitional time between the summertime season and the fall season, right? So this week, right, with Labor Day holiday behind us now, we're transitioning into, right, this fall into winter season, which, as I mentioned last night, is one of the best times of the year to be a trader. So that means there's going to be some extra volatility in these markets as traders start to balance portfolios as they now look into the end of the year. At the same time, too, we also know next week is quadruple witching, right? Quad witching, as we call it in our trade room. Next Friday is when all four asset classes expire. Now, what does that mean for us this week? Well, you know, a lot of people take the whole week off next week from trading because it is that unpredictable and volatile, and that means that this week has a sense of urgency to it, right? With next week being quad witching, you better believe a lot of professional traders, a lot of big asset management firms, they don't want to have to do their work next week when all four asset classes are expiring. They're going to start doing it this week, right? Again, you and I are day traders, right? We're just a bunch of little speedboats, right, whipping around the ocean. There's a bunch of big, cruise ships out there that can't turn themselves around very often or very easily, and they're going to start making positions change here this week. So we definitely expect to see increased volatility this week. We saw that, right, today and yesterday, and of course, there's going to be a sense of urgency, right, this week as well as we go into, right, quad witching next week. Now, also on top of that, we do continue to listen in for more updates on stimulus packages. I'll tell you right now, you know, we've been hearing a lot of potential about this, but it sounds like they're still kind of tripping over each other on Capitol Hill right now. We heard from the White House a few hours ago saying how they were actually trying to find a way to go around Congress now to get a bailout, right, for people like the airlines, right, in some of the states that need it the most right now. So the stimulus package is still a known unknown as we go into the end of the week. It is a bit frustrating though to see how much they are really tripping over each other on Capitol Hill right now, but that is the reality of the situation. We'll see if we get updates on stimulus. So definitely volatility is expected to continue. We do have a sense of urgency, and will we see any updates this week about stimulus? That is definitely something on our radar. Now, you want to talk about urgency. Boy, tomorrow is going to be a day where tomorrow could be a pretty busy day. There's a lot of news tomorrow. And really, remember, whenever Monday is a holiday, everything kind of gets pushed back into Thursday, right? So anytime we have a short week, that Thursday is always going to be the busiest day of the week because everything kind of gets pushed back, right, into Thursday's trading session. So, of course, tomorrow, we got a bunch of big news tomorrow. You'll notice here we got the PPI number and the jobs number. at 8:30 Eastern time. That will definitely get you out of bed early tomorrow morning to get you to your desk. You're with us in the trade room. Then later on in the morning, we got the, well, not later in the, well, almost, yeah, still the morning, but almost afternoon session, right? You get the weekly inventory report tomorrow at 11 o'clock. Remember, that is usually on Wednesdays at 10:30, right? Usually that employment or that petroleum status report, which we know as the inventory report, usually that report's on a Wednesday, right? But again, because Monday was a holiday, it gets pushed back as well. And then I don't think we're going to get that big of a market moving event off that bond auction. Probably not going to be that big of a deal tomorrow. So really, the two times that we really have some big powerful news tomorrow is at 8:30 and 11 o'clock Eastern time. So you definitely want to make sure that you're at your desk around there. Now, I will also say too, we have seen some of the best setups in our trade room in that kind of 10 o'clock to 11 o'clock hour here. So I'll tell you, tomorrow has really potential to be a really great day in our trade room and a really great day in the markets. You know, we always have a great day in our trade room, but rarely do we see a morning session where we've got such good news to begin with, such good news to end with. And since we've seen a lot of our best setups in that 10 o'clock to 11 o'clock hour, we seem to have every time slot covered here tomorrow on Thursday morning. So we'll put the plan together tonight, obviously. And I know I'm a little bit early on this video tonight. It'll be a little bit of a shorter video tonight. I got to leave the office and hit some meetings this afternoon. But I want to make sure I get the video out to you guys nonetheless, though. Tomorrow morning, though, we'll get together and we'll trade this stuff together. Tomorrow morning, I would love to have you with me. What I'll do is I'll put a link in the description of this YouTube video. We open up every morning at 8 o'clock Eastern time, and I'll put all of the membership links you need to grab the link, come join me tomorrow morning and every morning, 8 o'clock Eastern time, Monday through Friday in our trade room. Again, it's in the description of this YouTube video, or if you're on the blog right now at Sideways Markets, I'll put a big button down there for you, right, on the trading blog. All right, we're looking good. So tomorrow, Thursday, busy day. Friday should be a great day with that CPI number as well, but we'll talk more about that right on our way into Friday's trading session. All right, let's get the charts going here for us today. Taking a look at some charts right now. Got plenty to work with going into Thursday's trading session. I got the S&P, of course, got the oil, and we got the gold. Now, gold is really setting up nicely. Get a beautiful spike in flag or a spike in pennant or a spike in channel. We'll talk about that. That makes our job pretty easy on the gold for tomorrow. Crude oil, right? Crude oil has a nice big two-legged move. They're trying to make their way up to that $39 a barrel on oil right now, but it's a big magnet right in their way. I'm looking for a nice deep pullback on oil for another leg higher here. We'll talk about that in tonight's video, obviously. And then how about some S&P? Boy, oh boy. Did you see that S&P? That gap down and that snap back up, man. Oh my goodness. They get the whole entire pendulum swing completed. I'll tell you, if we didn't talk about it last night, it wouldn't happen. I wouldn't have believed it, right? What a great day on the E-minis. Let's grab that first here tonight and let's get this thing going here, right, on the E-mini. What a move, right? What a move. An incredible gap down, right? We saw that last night, right? And at first it was like, oh my goodness, this could be another bloodbath, right, going lower. But we had that measured move, right, from last night's newsletter. We talked about this. You know, they're 3 legs down, and you know, we talked specifically about how difficult it was going to be to really get below that area. And man, oh man, they gapped down and then whoop, right back up into that trading range and completing that monster pendulum swing, right? We had that range on the chart from last night's newsletter, and of course the amount of the move below the range is the amount of the move above the range. And again, if I hadn't seen these things work hundreds of times in my trading career, I would think they're magic. They're almost magic the way these pendulum swings work. Isn't that incredible? It really is. Anyways, back to our plan here for tomorrow, right? As I always tell my clients, we're only as good as our next trading day, right? Every day we start from zero. zero, right? Isn't that the truth? Every day we start over from zero. We don't let success from today, right, affect us tomorrow. We don't let a loss from today affect us tomorrow, right? We keep on executing same way every single day, right? We take the emotions out of it. All right, what's going on with the S&P 500? Well, we know that we have that big, strong move up. That strong move completes the pendulum swing. Now, what is very interesting about that strong move is you'll notice that we had that strong leg up, they pulled back, and they closed the loop. Now, this is very, very important. If you're a member of my trade room, you know that open loops and closing loops are a big part of what we do in our trade room. They open up the loop and they close it. So what that tells me is there isn't a big sense of urgency for these buyers right now, right? If we didn't have the rest of this, right? If we didn't have all of this would just be a strong move up, and we'd be looking for any possible way to get in before they retest that high. So a big, strong run up. They finish off their pendulum swing. You can also see they finish off, right, that triple measured move as we go. And like a lot of times after a big up day or a big down day or a triple measured move, we end up seeing what looks to be like a trading range, right, in the making. You know, we get that bit of a double top up there, and just it looks like the market's going obviously bullish, right, into a trading range. So that's kind of where we are right now, right? We're a very strong bull run. We can easily see we've completed a lot of the missions, right, pendulum swing and measured move, and it feels like we're going sideways here a little bit inside of a trading range. Now, what do we do inside of a range like this? What do we do with a bull market? What do we do with a bull market into a trading range? Remember, there are three basic, well, there's really two basic ways to trade, right, a bull market into a range. One way is to buy a seller failure, right? Basically, we call these failure patterns, a seller failure pattern below the range. And then the other way is a breakout, right? And there are two types of breakout patterns I like to use. The first one is a 1, 2, 3 breakout pattern, which I then mark up that high, mark up that low, and then buy that first pullback off the low, right? We call those 1, 2, 3 breakout patterns, right? The second one is a 2-try breakout. This one requires a very strong move up. It'll be a shallow pullback to the moving average, a higher high in price, and a trap below that low, right? We talk about these quite a bit on the newsletter. So I do apologize if I'm repeating myself on this, but there's a lot of folks that come in for the first time every evening, and just like you, right? Everyone needs to start right in the right direction sometimes. So we have three basic plan of attack for this, right? For this bull market into a trading range. Do we see a nice deep pullback, right? Or do we get the breakout going higher, right? So now's your chance. Grab that screenshot if you want to. Bull market into a trading range. 1, 2, 3, right? Grab that screenshot. All right, back to our charts here now. And now let's get zoomed in here now, right? So we know we're bullish. We want to be a buyer at a support level underneath this trading range, right? So there's my range, double top, right? That double top, usually a pretty good giveaway for a trading range. Find some support underneath the range. Support level, support level, support level, right? Beautiful spot right here to start looking to be a buyer. But there's one thing that comes into play, and if I zoom in a bit closer now on this chart, you can probably see it. You can probably see the problem. The problem is we have this trend line coming down overhead. Well, I shouldn't say it's a problem. It's not a problem whatsoever. It just creates a slightly different dynamic for this entry. You know, for example, anytime I see a strong move up and I see a two-legged pullback like this, I draw a trend line over it, and I like to use that trend line as a level of support on the other side, right? Now, you'll notice that looks very similar to, if you recall a few minutes ago, right, very similar to a seller failure pattern. So that is what I'm looking for here on the S&P, to be a buyer underneath this trading range. The only kind of nuance to it is I've got this, unfortunately, I've got this trend line I have to kind of work my way around. So I'm going to combine those two patterns. I'm going to combine what we call a two-legged pullback pattern along with basically a failure pattern, right? A seller failure pattern, right, for this entry. And what I'm going to do is I'm going to look for that up, over, and then use that trend line, right, as an area of support. Now, I can also be a little bit more aggressive on this if we don't get that up and over, okay? For example, sometimes we just simply don't get that perfect, pullback over to that trend line. Sometimes what happens is we get this. As the market pokes itself higher, we see a shallow pullback and the market tries to go higher. I'm going to wait for another entry with a trap below that low. So that's the secondary pattern I'm looking for here. Again, the first one I want is that two-legged pullback, right? That two-legged pullback up and over, because I'm at a great area of support. I love this area right now. I love all the support here. It's just I have to respect that trend line. So step one will be that two-legged pullback up and over. If I don't get the ideal entry off of the trend line, I'll look for a trap, right? Which of course requires the bears try once, the bears try twice, right? And of course we can go from there. All right, makes sense, right? So a two-legged pullback or a two-try trap pattern, buying underneath the low of that trading range. Now, how about the upside right now? Can we trade this breakout going higher? We can, but we have to be careful because we know we have that pendulum swing. There's a lot of resistance up here, right, overhead right now. So how do we trade a breakout going higher? There were two patterns, right? Let's talk about those two patterns. One of them is a 1, 2, 3, basically 1, 2, 3 breakout, 1, 2, 3 continuation, blows right through those highs. And once I get that 1, 2, 3, and keep in mind, it could be stronger move, 1, 2, 3, right? The key here is I want to see him get a strong move up. I want to see him pull back to the moving average, and I want to see him jump off the moving average and really push through these highs here. If I can get that thing to push to the highs, mark up that high, mark up that low, and I'm buying off the low. Remember, first test is always the best test, right? That's called the 1, 2, 3 breakout pattern. And then my second, of course, breakout pattern would be, now this one, we've really got to see some strength on this one. It's not going to be enough just to go back to the highs, right? It's going to really have to be a strong push. I'm going to want to see a shallow pullback, a higher high. This one's going to really, it's going to require a little bit of a, it's going to require a really strong move, right? Because we're going to have to get through those highs. It seems more likely that we'll see the 1, 2, 3 breakout pattern than this 2-try breakout, but that is the one I'm looking for, right, as we break out of this trading range. Now, where could these buyers be going right now, right? Where would they be trying to go? They're probably trying to go back up to that 34.53 top, 34.84 top. You can definitely see some of these easy levels, right, to use as targets for tomorrow. So based on the size of those breakouts, we'll definitely be looking for, right, those targets as we go tomorrow. Now, we haven't talked about the short side. Before we go into the short side, though, I just want to remind you that tomorrow morning, we'll be trading all this stuff together in our trade room. But if you're not going to join me tomorrow at the opening bell as a member of the trade room, you got to grab our free trading classes. In the free course, I'll put a little button up top there in the upper right-hand corner, right? Grab that free course. In that free trading course, you'll learn my 4 favorite patterns. You'll learn all my breakout patterns, my failures, my traps. I'll also show you hundreds of examples of how we apply those patterns to our favorite futures markets, right? So you got to grab that free trading class, especially if you're not with me every morning at the opening bell. And again, as I mentioned, there's a little pop-up there in the upper right-hand corner. Grab that pop-up, get registered for the free course. And don't forget, I'll put all of these links, by the way, in the description of this YouTube video. All right, now, we haven't talked about the short side yet, right? How do I sell this thing short right now? There are really two ways I'm looking forward to selling this market short right now. One is going to be if they hold this pullback, right? If they hold this pullback now, I can effectively call that, right? If they hold this pullback with a 1, 2, 3, right, reversal now, I can now draw a trend line off those lows. I can mark up that high, and I can look for that entry, right, off of that high. So that is pretty simple at this point, right? If they can just hold this pullback, right, we should be able to continue this back down into that trading range where we came from yesterday, right? So think about that 3360 level, 3360 being kind of like the middle of that trading range. So again, they've already got their strong move down. They did that job for us. If they can hold this pullback and run, good. Now I can mark up that low. Now I can mark up that high, and I can look for shorts, right, up around the high of that hidden channel. And I'll tell you, I would love to find a way to combine that trend line along with it. I don't know how I'll do it yet, but we'll see how it looks as the day develops, right? Either overnight or tomorrow morning. Now, one more pattern I'm watching for here would be, let's just say, for example, the market collapses, right? Let's say it collapses and we end up kind of sitting back inside this range tomorrow, right? That's an easy one because now it becomes a bear market into a range. And we just talked about how to trade a bull market into a range. So just flip it around, right? Now look to sell using a buyer failure pattern, right? Which is basically a buyer breakout pullback failure, right? So use a buyer failure up above the top of that range. So take the patterns we just talked about and flip them around. And again, I cover these failure patterns are probably the most common setup, right, that we see. They're not as powerful as traps, right? Traps like these guys. Oh, sorry about that, right? Traps like these guys. You know, traps are always my favorite because they're going to get me in the lowest possible price, right? Little traps like that. Those are my favorite. And again, I cover all of those in that free trading course, that little button up there in the upper right-hand corner. All right, guys, we're looking pretty good on this, right? Looking pretty good on this. Plan is ready for tomorrow. Let's keep this party going. How about some oil for tomorrow? Now, of course, oil has a news day tomorrow, right? Tomorrow will probably feel a lot like a Wednesday, right? If you're familiar with oil, you know that Wednesdays tend to have a bit of a confused feeling. You know what I mean? Right? Oil on a Wednesday, because of course Wednesdays are usually the inventory day. Usually Wednesdays are going to be one of the more tricky days to trade crude oil because, again, it's a news day. So tomorrow we'll probably have a little bit of that, right, for tomorrow. I'll tell you though, I always come out every day with an open mind, but you know, be aware, right? Tomorrow might be a little bit weird, right, because of that, again, that news event that usually isn't there, right, on Thursday at 11 o'clock Eastern time. Now, what do we know about oil? Well, we know that oil, right, had this strong move higher. They went into a trading range. And then sure enough, right, we see that, right, we see buyers buying below the trading range and they get a real strong move higher. Okay, that strong move higher, you'll notice, goes up, pulls back, and then retests. Now, why is it important? That because, as we mentioned on the S&P, it opens a loop and then it closes it. So what does that really tell me? It tells me that they were bullish, but there isn't a huge amount of urgency in this market. And that means we've got to stay patient to buy nice and low, right? We really want to make sure we're not getting too aggressive. Sometimes you'll see the market make this strong run and then pull back. And when it does that, right, it leaves an open loop, and we know there's a sense of urgency back to retest that high, and we're going to get aggressive on that. We don't have that sense of urgency this time around, right? We don't have that sense of urgency this time around. So we know we're bullish. We just don't have a tremendous amount of urgency on behalf of the buyers. So we're looking to be a little bit more selective, right, if you will, on our entries. So now that we know we're bullish, we want to buy at support, right? We want to buy at support. So I can easily go out and use this trading range as a support level. In fact, that's going to act like a magnet, right, for all intents and purposes, right? So that range will act as a magnet, right? Market goes up, trades sideways for a while, right? Jumps back higher again. So that magnet is going to try to pull this thing down, and then it's going to put me hopefully into some of these key areas of support, right? I've got a reversal line, that prior top around 37.60. I've also got this little hidden channel I've drawn in, which is really kind of what I think is where you're going to find your best entries, right, off of that hidden channel, right? So that's kind of the idea here on this oil. We know we're bullish. There's not a huge amount of urgency in it. We know we have a range that will try to drag that market lower, right? And as you can see here right now, right, market kind of flirting with this possibly a trading range up here, right? So if you look kind of closely at it, they may end up going into a range a little bit higher there as well. That's some food for thought as we go into tomorrow. So what's the best plan of attack on this? Well, this is one of those situations where it all depends on the pullback. I do want to be a buyer on this right now, but it all depends on the pullback. You know, you'll notice here we have a little trap going on right now, nice little trap low. So if you know, I want a deep pullback, right? What I want is I want to see us get down into the low of this channel. I want to see these bears come in, try to get short. I love to see these bears get short around the moving average. That tells me exactly where their stops are, right? And I can buy into those stop losses. That would be kind of my ideal entry, right, on this pullback right now. Basically, it would be a seller failure into what usually turns into a bullish pullback combination. You're going to want to learn these. These are covered in the free trading course that I mentioned earlier, right? That failure into pullback combination, right? It's basically a seller pullback failure into a bullish pullback. And again, they're very common, right? They happen a lot together. That's why I call it a failure into pullback combination. And again, that pattern, right, is covered in a lot of detail in that free trading course. Grab that button in the upper right-hand corner to grab yourself the free trading class. Now, one thing we do want to be aware of, though, is what if we don't get that deep pullback? Because in all reality, this guy right there, right, there might be a little bit of support up there. You'll notice they came back and tagged it right there. So there is a chance we may get the bears trying once, the bears trying twice, and we may not get a very deep pullback, but it may kind of eventually get over to that channel. You know what I mean? This happens every once in a while where the market won't give me a deep pullback and then go up. It'll kind of tread water for a little while and then it will hit the bottom of that channel. Does that make sense? Right? So in this example, it may not give me a deep pullback, but it may use the low of that channel. And what you want to do in these situations is we're basically checking one box, but we're not checking the other box, right? When we're buying too high, we're buying too close to where this potential range is. We're not getting a deep enough pullback. Again, there's not a huge sense of urgency in this market, at least not from we know right now, because there's no open loops on this chart right now. So knowing that, if I don't get that nice deep pullback, right, really down into that range below, I want to be patient and look for a trap entry from there, right? So be aware of that. Now, we may also go higher here, right? I mean, for all I know, the market may overnight here, it may V-bottom and take off to the upside. If it does, keep your eyes on that 39, right? Keep your eyes on that 39. 39, we talked about this level last night, 39.03 is this big, if you keep looking backwards here, I think I can grab it here. Was it there? I don't think it's over there, is it? Yeah, it doesn't go. This chart doesn't go back far enough. But that 39, you'll notice 39 is a big range, right? Ranges are magnets. So, but that 39, 39.03 level is a prior low from a few weeks ago. So you'll definitely want to make sure you have that on your radar. So, be aware if the market kind of V-bottoms right off of this low, keep your eyes on that 1, 2, 3 reversal, mark up that high, mark up that low, right? Grab that pullback. Believe me, I want to buy, right? I want to buy that dip. But if for some reason we don't get the right pattern trigger, if we don't get the right setup, or let's just say the market, right, slams lower and then reverses back, you know what I mean? Oil does crazy things sometimes, especially when it's coming out of news. But just watch as it whips back up. Watch that 1, 2, 3 reversal. Grab that high, grab that low, find that hidden channel, and we're buying right off the low of that hidden channel. So be aware of that, right? It may also V-bottom and right up as we go. Strong move up, right? Shallow pullback, higher high with that trap as well. So we can definitely kind of use those same breakout patterns that we talked about in the S&P. You know, if for some reason it really whips off that bottom and doesn't give us an easy entry on the setup. Now, one more thing here. How do we get, right? What happens if the market gets dragged, right, back into this trading range? That could easily happen, right? Because this trading range, of course, is a magnet. So if we do end up getting dragged back down into this trading range right now, right? If we do end up going back into that range, and let's say, for example, right, we sit there for a while, if we spend a good portion of the overnight back inside of that trading range, this basically evaporates those buyers' momentum and now puts us basically back into a bear market here, right? Because it'll be bearish before we go sideways into that trading range. What do we do in that scenario? What do we do if a market is, and again, the scenario here is it gets dragged back into that range and ends up getting comfortable here for a while? What do we do with that situation? We want to be a seller now, right? Because momentum has turned, and now we'll look for, right, that chance for that one try, two try. We call those basically failure patterns, right? I call these two try failures. Love these failures. They're very, very common in range-bound markets. Now, also keep in mind too, you know, they may just kind of bury themselves in that range for a bit, and they may just simply 1, 2, 3 reversal after that news comes out, right? So, and I know I'm covering a lot right now, but I want to make sure you can see there's a lot of different ways we can really kind of, you know, be flexible with how we apply these patterns, right? So if we do go back into that range and get stuck in the mud, then look for that 1, 2, 3 reversal. That'll break us back out, right? I can look for that first try off the low of that channel as well, right? So there's a lot of options here, even if we do get stuck back in that trading range. And of course, there's also a chance too, we go right back to those lows tomorrow morning. What if they go one strong move down, but they hold that pullback and they jump? Bingo, it's on. 1, 2, 3 reversal pattern, mark that low. Now, in this particular example, I'll probably try to use those highs up there, right, to find that channel. It really all depends on how it drops, right? If it collapses like this, I'm not going to be foolish and try to wait for that much of a pullback, right? If it really collapses, what I'll do is I'll mark up that more aggressive channel. You know, it really all depends on how the market moves lower. You know, that's one of the little nuances that it's nice to be with me in the trade room because I'll go over all those nuances. You know, does that make sense, right? It's unrealistic for me if the market just collapses like that to expect this thing to pull back all the way to that trend line, right? But if I can get a strong move down, if I can get these bears to hold, right, and the market kind of, you know, just kind of grinds lower here, yes, then I can mark up that low. I will definitely try to incorporate that high and create kind of like that, right, little hidden version of that 1, 2, 3 reversal. So again, that's some of the nuance we'll talk about tomorrow morning in our trade room. Really, right now, it all comes down to what happens on this pullback. Do we bleed down into that trading range? Do we bounce off the top of that range into a seller failure? Only time will tell right now, but at least we have a good plan of attack. All right, oil. You're looking great there, oil. How about some gold? How about some real gold, some yellow gold, right? Not the black gold. Let's grab some yellow gold here tonight. All right, let's get this party finishing up here. And again, a little bit shorter video for you guys tonight. I got to get out of the office here a little bit early, so I want to make sure I got this thing out to you guys before I finish up the day today. What are we doing about gold right now? We know gold has a strong move, right, into a what looks to be like a pennant, right, or a not a flag, right? It could be a, well, you know, flags are usually against the trend, right? So flags are like that, right? This is kind of like a spiking channel. It's basically what you call a pennant, right? It kind of looks like one of those old, you know, sports, pennants, right, or flags, right? So it's basically a pennant. It's traded exactly like a spiking channel, right? Spiking channels, we talk about spiking channels pretty often, right, in this newsletter video. Spiking channels are definitely one of the top 5 patterns that you really got to learn as a new trader. And the key is you want to look at the base of the channel, right where that channel runs into the kind of the flagpole, if you will, right, or the spike, if you will. That's where you want to really focus your eyes. What I do is I use the first pullback, right? That first pullback, the base of that channel, and look for a pullback into that area. All right, so that's the idea here. That's the idea, okay, on a spiking channel, right? Wait for that pullback. So you can see I've got that move up, and I've got this area here marked up as my battle zone. Now look at that area, because that area, you'll notice it's not just the first pullback there in that little spiking channel there. It's also a prior high there, right? And you can also draw that trend line over, and boy, does that area fit really well. So if I had it my way tomorrow, I'd get down into this, what is that, 48.3, 44.5 area, right? If I had it my way for tomorrow. Now, let me zoom out real quickly here. And you can kind of see where we are right now, because I do think this is a very important part of this process, because you'll notice we are right up around these highs right now, right up around those highs. And you'll notice they haven't, right? There's a lot of levels up here, right? A lot of levels up here. And so we're very, relatively speaking, we're very high up on this chart right now. As I zoom in even closer here, zoom back in here, you'll notice I've got one big leg, I've got two big legs. So, guys, in all reality, you could almost think about this area here as kind of a, it's not a brick wall, right? But it's definitely going to be a level of resistance, right? So we got to be careful as this market goes higher. Really at this point, I've got probably 4 different scenarios that I want to make sure I'm ready for, and make sure you are ready for tomorrow. If we sit and go sideways, right? First of all, because you can definitely see there's a range in here. You can definitely see there's a range up there, which, you put it in context and it makes sense. They're kind of banging their head against, right, that overhead level of resistance. So I think the first thing I want to make sure you're aware of is if we get stuck in the mud here and start going sideways, what's the plan then? The plan is to wait for, right, that failure pattern, right? Wait for that breakdown. Wait for those bears to come in and try to get short off the pullback, right? Wait for those poor suckers to wrap that rope around their neck, and then we'll buy right into their stops. Right? One of my favorite ways to trade. Just remember, you want that pattern underneath the range, right? Underneath the range. You remember, we talk about this all the time, right? If for some reason, let's say for some reason, we saw for some reason the market goes sideways, and let's say, for example, we get a move lower, and then it snaps back up. Right? Snaps back up, right? In that scenario, since I'm so close to that range, traps, right? Traps are the go-to on that one, right? So just remember that you want to be buying underneath the range, and the idea is always the same. I want to get underneath the range, get the bears to fail, and go back up to retest the high. Ideally, we get underneath the range. Again, we go sideways, we get underneath the range, we see bears come in, try to get short, right? And we sell into those stop losses. That's very typical. That is the ideal. However, sometimes though, what happens is the market will shoot down so quickly when it comes back, right? It'll test. And that's the thing. You don't want to take that one, right? Because that one's going to oftentimes kick out, kick back, and professionals are going to be waiting there for that trap, right? And we've talked about these trap patterns, right? Trap patterns are best to avoid buying too high, right? So be aware of that if we start seeing this go sideways. Okay, that's one scenario I want to make sure that I'm ready for. And that kind of leads me into another plan, which would be, what ideally I'd like to do is I'd like to use this big trend line here. That would kind of be the home run scenario for tomorrow, right? Use that trend line there as a key level of support, and hopefully we can get that, nice deep pullback here, down into these areas of support here, get those bears to come over, right? Get them to try to get short, really rope them in, get their stops out. Remember, guys, it's not just their stops, right? It's their pain. And that's the key, right? Because what do traders do when they're in pain? They do stupid things, don't we? Right? We make impulsive decisions. They reverse their positions, right? Well, obviously the stops, and then they buy their way out, right? So remember, traders take their time getting in. Most traders do, but they don't take their time getting out. right? When they get out, they just go, get me the hell out of this. I'll take whatever price you can get me out at, right? The pain is the key to these success of these setups. Once those bears realize they're wrong, their stops get hit. A lot of them will flip it and chase it as it goes higher. I don't want to chase as it goes higher. I'll buy into stops. I'll buy that pullback as long as that pullback, again, is below that trading range, right? That's the only kind of caveat, right? Or not, sorry, as long as that pullback, in this case, right, is not too close to that high, right? In this case, we're not talking about the range, right? So no range to worry about here. I will buy that pullback as long as that pullback is not right at the high, right? That's when you don't want to take the pullback pattern, obviously. All right? And again, we'll talk more about this. We'll do it tomorrow in our trade room. If all we get is a very shallow pullback, right? A very shallow pullback here. I have no problem with shallow pullbacks, but I'm not just going to blindly buy, right, into a major level like that. But I will definitely give it a shot for a trap here, though. Right, I will definitely give it a shot on a trap. So shallow pullback, right, into a trap low, right? So deep pullback failure, shallow pullback is going to be a trap pattern. Now, this market may also keep on grinding. You know, we may also just kind of keep on grinding here. If we keep grinding, which I wouldn't be surprised, because again, we haven't reached the measured move yet. If we keep on grinding, you watch that trend line. Right? Watch that trend line. If it keeps on grinding, you know, relatively speaking, that trend line is your best friend. Because that trend line, we can wait for that nice deep pullback. We can use those moving averages to rope in the counter trend sellers. We can buy in their stops. We can buy those pullbacks, right? So just keep your eyes on that if we do keep on grinding higher here. And then obviously, right, if we really break running higher, right, what are two breakout patterns? One would be a 1, 2, 3 breakout. We talked about this already, right? 1, 2, 3 breakout, mark that high, mark that low, buy the first test. Or maybe it just jams higher, right? The moving average, right? Moving average comes up, shallow pullback, higher high in price. That gives me now that 2-try trap pattern. Both of these will be great. I just have to wait for more proof because, again, it's not so much the bullishness I'm worried about, it's location that I'm worried about right now, right? So get me through these highs. Get me through this measured move. Show me you really want this stuff going higher here, gold. And then, of course, you can see 1976.5, right? That is the next level up on the ladder, as you can see. But I'll tell you, I mean, there's obviously that big round number of 2,000, what everyone wants to get to tomorrow. That would be a pretty big jump, right, for tomorrow. It wouldn't be surprising, though, there's a big range you can see there over at that 1976 half area. That would be a very reasonable objective for those buyers here tomorrow morning. All right, guys, so watching out for that breakout going higher. Can we sell this market right now? Can we sell it? Well, I'm definitely not in the mood for a reversal pattern right now, especially not until we reach that measured move, but I would have no problem using this range as a magnet for price, right, and go 1, 2, 3 reversal. I'd have no problem with that. I'm not going to go try to pick a top on this thing right now, though. No way. I'll wait for a 1, 2, 3 reversal. Once I have that reversal, then I can get serious, right, about selling the high of that hidden channel. Remember, guys, right, location is not as important on this pattern. Once you get that 1, 2, 3, it gets everybody all riled up, right? The open loop wants to be hit, right? Like I always mentioned, I really should call this the FOMO pattern because that's what it is, right? Nobody wants to miss that next pullback. So definitely keep your eyes on the reversal. But, you know, again, I'm not trying to step in front of this freight train right now, and I'm not in the business of picking tops and bottoms. That's for sure. So tomorrow morning, Thursday morning, I hope I'll see you there with me. Got a great plan of attack. It's going to be a busy session, right? It's going to be a busy session tomorrow in the trade room as we go into the last couple days of this week, right? Of course, we got quad witching week coming up next week. So as always, I'll put all of the important information you guys need to get registered. I'll put all the info in the description of this YouTube video. Please don't be afraid to call me in the office. I am going to be traveling a bit here for the next few hours, but I will have that phone forwarded to the cell phone, so don't be afraid to call that toll-free phone number. I'm also always available on live support, right? The little chat widget there on our website. So call the office, send us an email, jump on Skype. Whatever you do, though, whatever you do, don't miss tomorrow morning, 8 o'clock Eastern time, Monday through Friday. I hope you enjoyed the video tonight, but I got to run for now. Time is ticking. I'll be back tomorrow morning with you guys in the trade room. And of course, we'll do our nightly newsletter again tomorrow night, as always. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.